Good morning, traders. Today is Wednesday, December 14th. My name is Charles, and this is the Pirate Traders live stream. We're going to talk about the ES, the NQ, and the two-way auction process. But first, just a quick announcement to let everybody know I will be back here on the public stream at 2 p.m. today. So mark your calendars. We're going to be here to watch those FOMC notes come out together. All right, well, that brings us to the beginning of our analysis for the morning. All right, what happened yesterday? Well, yesterday on that CPI news, we had this major move to the upside, obviously a short covering rally. We know it was a short covering rally because they came right back down, right? There were no new buyers up here. We know there were no new buyers up there because we spent very little time and brought in very little volume up there in the upper end of yesterday's range. So that tells us there were not buyers there. We had to come back down looking for buyers at lower prices. We then found them at the end of the day, right about at the balance area high. Okay, the previous balance area high, which is very, very common. Often if you're stuck in a balance area and you're finally able to break out, you have to come back and test it once again, looking for support before you can get continuation to the upside. So as of right now, market opening inside the previous day's range, overnight just rotated above that previous balance area high. That's actually pretty bullish, or you could call it neutral to bullish, because we are finding support above that balance. Okay. But this is where it gets tricky. If today's market starts to trade back down into this previous balance area, well, then it increases the odds we don't have the buyers here, and we have to take the market back down towards the opposite end of balance. You add on top of that what I tweeted yesterday, that above the market now we have a lot of excess, a lot of single prints, okay? And below the market we have a lot of weakness. Excess can be a sign that we don't need to go back up again. Look at how little time we spent and how little volume we brought up there. Not a lot of people wanting to do business up there. But weakness tells us there's a lot of business that still needs to be hashed out down here. And so it's a little bit bearish to see that. So those two things in combination, it's a little bit bullish that we found support at the balance area high. It's a little bit bullish we stayed above there in the overnight. It's a little bit bullish we're opening above it. But man, with all that excess above and all that weakness below, it's very tricky to trust that bullishness. So I'll be watching, as always, the overnight range. It is a chop zone, so we are expecting the market to grind up and down inside that overnight range. If we break the overnight low and get some selling there, I will look for continuation to go test yesterday's low. If we get below yesterday's low and get selling there, I will get very bearish for continuation to the downside. So if we get below 40.44 and we find new sellers there, I'll be looking to test 40.26. If we get new sellers there, I'll be looking to go lower, okay, and monitoring for continuation to the downside. And then same thing to the upside. If we're able to get above the overnight high at 40.72 and find buyers up there, find support, I will get bullish as the breakout of balance, right? They retested the balance. Now they're breaking out. So if we can get above that overnight high and find buyers there and find support, then I will get bullish for continuation. It is worth noting that that was a base of single prints from yesterday. And so that is somewhat of a weak high that we left behind in the overnight. So we may just need to poke up there real quick before pulling back down. So got to see those buyers up there. Does that make sense? So that's our basic idea. Either the market's going to find support up here and it's going to head higher, or if it pulls back down below the balance area, it's probably going to head lower. And none of that matters once 2 p.m. comes. So whatever is happening with the market today, one way or another, when 2 p.m. comes, it all goes right out the window and anything can happen. So everything I just described to you is pretty much pre 2 p.m. And after that, who knows? But as I mentioned, we'll be here live streaming again at 2. So we'll figure that out at the time being. But between now and 2 p.m., I have just laid out a roadmap that you could consider. What would you do if the market pushed above the overnight high, found support, and was looking to go higher? What would you do if it pushed below the overnight low, found resistance, and was looking to go lower? What are you going to do with the chop that we now have in the middle, the uncertainty? Make a plan now. Because you know the order of business for the market up until 2 p.m. And so begins the chop zone, chopping it up. Okay, adding to the chop zone effect is a weak high and a weak low. I'm going to consider the high weak because it was all sellers at the high. So that tells us there's likely still more business to be done up there. And I'm going to consider the low weak because of a combination of two things. One, they were only able to go down a single TPO, a single letter below the opening price. So that's half a point. That increases the odds they want to do business lower. And then also the taper on the low is not good down here. Having 700 contracts at the low and then 200 above it increases the odds. They need to do some more business. They're looking for good taper like you see at that overnight low, the way it's less and less contracts on the way down. So we've got both a weak high and a weak low. We are also inside an overnight range, where the overnight range traded exactly on top of the previous day's point of control. So this is balance on top of balance on top of balance, increasing the odds of chop. They did it again. Another weak high. And again. 3 in a row. So we know what that means. Seeing it do that over and over and over again. The bots are setting themselves up. They want to have a nice morning of squeezing all the money they can out of this market before 2 p.m. They want to exhaust you. They want to burn you out mentally, physically, and literally burn up your capital before 2 p.m. when they're going to take this market to a new location, and they don't want you betting against them. So I think they're setting us up for a vicious little chop zone here. RK. Forget the bots. Bring back the people. Oh, they're gone. The people will come back when the stonks only go up. Once everybody starts talking about all the money they're making in the stock market, once they start bragging, and then other people start to feel that FOMO, Oh, they'll be back. They always are. Okay, so we've got ourselves a chop zone, and as always, what we're looking for is we're keeping a close eye on the halfback. That's a little white line that's in the center of the range. If it's going to break higher or lower, it will often turn that into support first. So I just noticed we're starting to build a little support above it. That's a little bit bullish to see. So let's see if they can get up there and test that overnight high at 40.72. And if so, can they bring in some new buyers up there? And of course, if it's going to be possible, they're going to have to hold the support on that halfback. Michael says, Fed Day, only the bots and the brave are out today. Yes, sir. Although those trading right now are less brave than those that will trade post 2 p.m. Those are the true warriors among us. Battle-hardened and fierce. Okay, so far that support is holding. Can they get those ticks back above the 0 line? If you have not yet, please smash that thumbs up button. I sure would appreciate it. Chilling with Dylan says there's been good pre-FOMC moves pretty much everywhere, or pretty much every time. Yeah, no, it's true. The market, it's prepared for FOMC. You know what I mean? It's become such an event over the last few years that there's a ton of anticipation. And of course, many of those people are going to be making bets. Some of them think he's going to say something that should make the market go up. Some of them think he's going to say something that should make the market go down. And they are all making bets. And so as soon as he says something, one side's going to be right and one side's going to be wrong. And then the side that's wrong must then unwind their position, and you get very violent moves. So when I say anything can happen, I sure mean it. And it can happen in a very big way. So pull out the popcorn, baby. It's FOMC day. And in particular with this one, man, just the way the market's been moving into it. Let's take just a second to step back and appreciate the daily here. Look at the last few weeks on the daily. In here. This literally looks like nothing but just pure uncertainty and fear. Nobody knows what's going to happen, which way this market's going to break. And so they are getting more and more emotional. The swings are getting bigger and bigger. What if that next swing is down? What if it's up? Today is going to be a big day. One way or to other. Okay, so they now held the support above the halfback, and they're starting to get those ticks back above the zero line. So that once again increases the odds they want to test that overnight high, 40.72. But it does not mean we're going to get continuation. We may just poke above and pull right back down. Oh, looks like I was a little early. Moment of truth. Can it hold? Greg says, I am so exhausted with waiting for news, watching news moves, recovering from news moves. I don't even want to trade. You know what you need, Greg? You need to swing trade, my friend. You need to look for the bigger moves over the longer time frames. And then you can let the little crazy moves up and down, do their thing intraday. Just say to yourself, let the day traders have their fun. Let them speculate and gamble and guess, and I'll trade over a longer term basis. I'll look for a move over a couple of weeks. SPX iron condors give that smoothness. Yeah, can you imagine if you had those on the daily? Like, can you imagine if, I don't know how you would have, but like if you'd have known in here to put on like a condor, like that right there, bro. Free money. All right, well, I take back what I said before. The halfback is holding, but just barely, and they are not able to get those ticks back above the zero line. So that tells me we're probably poking at support right now, and we're going to get more chop. I'll change my mind if they can get those ticks back up. It's gonna be a choppy morning, chopping up and down. All the children will get fooled twice. Their money will disappear like melting ice. As the market chops along. You guys saw that, right? You saw that literally the second I said I take back my bullishness, the market went straight up. That's why I hate chop zones. So hard to predict. Petrus, hi. Is swing trading now not almost impossible? No, not at all. I would say it's almost easier. So just like look at the daily. Imagine if you saw the market making higher lows here, okay? And you thought, I think we're going to go back and we're going to test. I drew this trend line. By the way, anyone could draw this trend line. It's not like I'm a rocket scientist here. I drew this trend line back here. Okay. So if I'm a swing trader, I've been looking at this trend line for a year, waiting for my opportunities. So I see that we're making these higher lows. I see that we're breaking out of this balance that we were stuck in for a while down here. What am I thinking? We're probably heading up to test that. So how do I play it? Well, that's up to me. You know what I mean? Everybody's different. Maybe I'm thinking I'll go long for the move up and I'll use this trend as a stop, you know, and I'll take profits when we get up to that trend line. Or maybe I'll say to myself, I don't want to mess with it in the middle. So I'll just put my short up there at the trend line and I'll just wait till it gets up there and I'll short it from there for the next move down. Again, that would be making a decision, entering a trade, and then sitting for 2 months and waiting. Okay? Then the market comes up. It spends one single day torturing you at that high. One single day being hard on you, making you question, making you debate. Am I right? Am I wrong? Should I be long? Should I be short? One single day, and then boom, it works exactly as you planned. Exactly as you planned months beforehand. When we were making those higher lows, when we were breaking out of that balance. Down here, you made the plan for what to do up here, and you had months to think about it. I mean, that's a pretty good move from, 4,100 to about 3,900, right? That's 200 points. If you'd planned ahead, you got in with a large size. Swing traders trade with larger size. You could make, 6 months worth of salary off of that one single move. Oh, geez. All right, so we tested the overnight high. We poked above. So now the question becomes, do we run out of buyers? Did we just look above the overnight range and poke back down? And now we got to head back down looking for buyers? Or do we have buyers up here at the overnight high? So the way we're going to measure that is we're going to watch the ticks. Can they keep the ticks above the zero line? Okay, that's a sign of new buyers stepping in. And can they get price back above that overnight high and keep it there? Okay. Right now we got another week high, so we know this is still just the bots. They're just playing their game, but they could set us up with an opportunity here if new buyers step in. And here is that moment. Can they hold the overnight high? Another week high. Dude, every time. All right. So far, and this is purely so far, they are bringing in buyers, right? We see all these pink candles coming in here. There's volume stepping in. And when we look at the ticks, we can see that they are staying above the zero line. So we assume these are more buyers than sellers stepping in at the high. So it's starting to build up some support. But the 8-period high is still weak. So if they repair it and then crash back through the overnight high, well, then I'll be wrong. Okay, finally made a good high. So now we've got excess. Decent taper. I usually prefer to see over 100 contracts at the high, but I can live with 73. Man, this is such a perfect teaching moment. It's so simple, guys. Does price stay above the overnight high? Do the ticks stay above the zero line? If so, bullish. This is like a textbook example. Either of those two break, more chop. Ooh, and a poor high. All right, I'm bullish. Let's see if they can get those ticks back above the zero line. Oh no, the ticks. Another week high. Jesus, man. If you guys are laughing at why I keep, or if you guys are wondering why I keep laughing at this, it's because this has to be the computers. There's just no way that keeps happening because of humans. Chase says, can't herd you. No, you cannot. I am a human, not a cow. Although sometimes when I move through the subway system, I feel like one. Hi, weak again. Chilling with Dylan says that the NQ is slightly more bullish. Oh, that's a good thing. I'm glad you brought it up. I think it's worth mentioning. I redrew the balance area for the NQ this morning. I looked at it again and I felt like it was wider. Earlier I had it like down here. So I'm now actually considering 12.050 or sorry, 12.044 to be, that's generally the balance area high. So you're actually just heading up to test that right now. So yes, it is bullish. You're above the overnight high. You're finding support. That is bullish to see, but you may run out of steam up here. Next major resistance is 12.050 and then up at 12.90. And the bigger question is, and again, just up until 2 p.m., can you find support up here above that bounce area high, which would be even more bullish to see. All right. Well, the market got above the overnight high. They brought in new buyers up here. They created some support. But now they're going to have to get something for it. They're going to have to get a move higher and head up and test that resistance above, or there likely won't be buyers waiting at the overnight high again. So pretty much they've got to hold it here and they've got to get those ticks up, or it's only a matter of time before this thing comes crashing back down. Come on, buyers. You can do it. Jerry, I like your profile setup. Do you explain your settings and preferences in the course? Um, Settings and preferences, not really. I mean, I show you every single thing on there and how I use it, like, why I have things set up the way I do. Um, but that's about as detailed as I go. If you want my exact setup, if you join the Discord, if you join the Brigade membership and you get in the Discord, there's a template in there. You can just, if you have Window Trader, you can just open it up and automatically have it. But since the market is being slow and grindy and boring anyway, why don't I just walk you through some of it? So what you got over here on the left side is the volume profile for the day. That's how much volume traded at each price level for the day. In the middle, you've got the volume profile for the current 30-minute period. So the way you read those volume profile is the higher the number, the more contracts are traded, the darker the color, the more contracts. So it lets you very quickly see where are the areas that the market has brought in the most volume today. It lets you see if the volume is tapering off or if you got a big flat end like this, which we consider weak. The white line that you see halfway through, halfway up and down right here, that is called the halfback. That is basically just 50% of the range from the high to the low. It works just like a Fibonacci 50% retracement, often acts as support or resistance throughout the day. The green line that you see below the, you see next to the A on the right, that is showing me that the A period down here is a selling tail, that this is where the market ran out of people willing to go short, was down here. And the fact that we have the red line to the right on the B shows us a buying tail, that that's where we ran out of people willing to buy to the upside. If you look over here at yesterday's range, you'll see those same things, but they're yellow. The yellow ones, that shows us single prints that are inside of a range, which are different than a buying or selling tail. A buying or selling tail can tell you that the market is running out of momentum in a certain direction, whereas single prints inside a range tell you the market needs to come back and backfill those single prints. Look what we did. Came back and backfilled those single prints from yesterday. Just for the record, I am no longer bullish on a bigger move here today. This move up is completely synthetic. They have just been intentionally dragging the market higher. It is bots on both sides. The buyers and the sellers are bots, and they are just slow melting the market up. I believe what they are trying to do is they're trying to bring in as many buyers as they can up here, and then they'll bring the market back down later and squeeze all those buyers. So I'm no longer trusting this for a bigger move to the upside. But of course, as long as they've got the momentum, I'll stay bullish short term to head up there and test the resistance. But this doesn't feel like this is real humans actually getting more and more bullish, more and more excited. They got to have it. They got to buy it. They can't even wait for a pullback. No. This is purely synthetic. Oh, what's that? Another week high again? Why is that happening? Oh, because that's how the computers do it. Michael says, I will bail out before yesterday's high. Yeah, I don't know that we're getting to yesterday's high. I can't tell you where, and I can't tell you when, but it does feel like we're going to run out of steam and pull back down. And I have a feeling it will happen very, very quickly. Michael hoping for 83, fingers crossed. Oh, no. If you're hoping for 83, you've got probability in your favor. That's the most likely outcome right now. I just don't know about beyond that. Alex N with some excellent advice. Press that like button. It might bring you good luck. Oh boy. Lost the ticks. That is a sign we are running out of buyers. Can they hold it? Alex, could I touch on what a weak high and a weak reference is? Yeah, essentially what a weak reference is conceptually is a place where the market has to revisit, or not has to, sorry, that's the wrong word. Has a higher probability that it will revisit that level. Okay? And the way you think about a weak reference is just one weak reference is no big deal. If you just have one weak reference below, you don't care. You don't worry about that. But if you have two, well, then you start to pay attention. You're like, wait a second, 2 weak references? That increases the odds. We need to go visit at least the first one. And then if you have 3, it's like, ooh, that really increases the odds. And 4 and 5. You see what I'm saying? So the more of them that you stack up, the more important they become. The way you see a weak reference is that a TPO will stop within a single letter of an important reference. So if we stopped within a single letter of the A period high, if we stopped within a single letter of the overnight high, within a single letter of the halfback, something like that, then that makes it weak. Because that is often the bots that put their orders in and they convince the market that it's going to reverse so that they can bring in stops here, right? So they bring it down. They stop at an exact level because they know everyone's watching that exact level. They know. All over the world, people are looking at Fibonacci retracements. So they know where that 50% level is. And so the bots go, okay, all these traders are looking for support here at this level. They're asking themselves, are we going to find support? So what the bots do is they come down and they find support there literally to a freaking tick. They make it look gorgeous. Like the Jesus, man. Just a perfect bounce. And they make you think, ooh, we got support at the halfback. And so you start to get long in here. You see that support. You start buying, right? Well, where are you putting your stops? You're putting them down there below that low. So that makes that low weak because there's liquidity waiting. The market, it knows there's business to be done down here. All these buyers, they can get squeezed if we just come back to here. So then that's weak and the market comes back and repairs it. But the thing about weak references are the moment they're repaired, they disappear. So if this were weak, if the B period came down, stopped right at that halfback and went up, and it was weak, we built up all those stops down here. All it would take is the market coming back, boop, boop, poking through that, and then it can go where it wants to go. So when I laugh all day long as they keep making weak highs, weak high, weak high, weak high, weak, the whole way up, I know what they're doing. I know the bots are just doing that to convince you and me to short and to put our stop above the high. And then they get that slow melting effect where they just keep pulling the market higher and higher. So let's go back to the book map and let's just look at where the stops are. Where are the people who are getting stopped out of trades? We've got icebergs on both sides of the market, okay? But where are the bigger stops? Above. The stops down, 20 stops, 50 stops, 20 stops. Stops above, 600, 400. You see that? Do you see the difference? That's why they created those weak highs. Again and again and again, they created those weak highs to create all those stops that they could squeeze and then move to the next level and then play that game again and move to the next level. And that's why I say this is synthetic, this move. This is not new participants being convinced that the market is undervalued and it should go higher. This is just computers slowly pulling the market higher to steal as much money as they can in between by stopping you out. It's not often they make it this easy to read. But today, they're being very blatant, very obvious. And of course, we all know why, as I talked about at the open, because they want to wear you out so that by 2 p.m., you don't even want to trade anymore. You're exhausted. You're like, forget this market. And then when your liquidity disappears, boom, they make a run. All right, so we're printing the C period up here above the overnight high. So in doing so, we have now pulled the point of control up to where price currently is. That is a little bit bullish to see, as we are now spending time and bringing in volume above the overnight high. Now, again, normally I would see that as bullish, as like they're trying to take the market higher. But you've heard me rant now for a full hour. I don't think I need to repeat it again. I don't think this is real buyers. I don't think the market is actually trying to go anywhere. I think they're just trying to squeeze as many people. So I think they're spending the time up here to bring in the volume up here so that they can drag the market back down and then take out all the stops of the buyers up here. And so I'm going to stay laser focused on that overnight high. And the second that that breaks, I am back to neutral. That's really the best I can do here. If the C period gets above the B period high, it will be one time framing higher. That is bullish. And it is technically, we had the retest of the balance area high. Break out of balance. Boom, retest. And now that could technically mean, if we start one time framing higher, that the market's trying to make a bigger move. But I just personally am not convinced. It's too perfect. All it would take is drifting back down into that overnight range, and every person who's been buying for the last hour will instantly get squeezed. It's too easy. As a matter of fact, I'm talking myself into bearishness as we speak. Yeah, I'm back to neutral. They can't hold that high. The panic selling comes in. We get a liquidation. And then the chop continues. Stuck inside the initial balance all day long. All right. With that, I say goodbye. I say good luck. And I say I will see you here again at 2 p.m. today. Come on back. We'll be live. And we'll watch the chaos together. It's going to be a good one. We'll see you then, guys. Members of the brigade, let's ride.